What's going on, everybody? Welcome back to another episode of the Rich on Games podcast. It's your boy CB, checking back in with you all. Happy Money Mondays. This is episode 27 of the Rich on Games podcast. I hope you all had a great weekend. And for the mothers out there, I hope you all had a great Mother's Day. Shout out to y'all once again. Happy Mother's Day. Without further ado, let's get right to it. But before we get right to it, I want to just say a few things. On your journey, you have to act big, but take small actions. So you might mean, CB, what do you mean by that? What do you mean think big, but take small actions? Exactly what I'm saying. Think in a big way, but act in a small, day-to-day operational system so that you can execute the little things continuously over time so that it builds up to the big goal or the big idea. You have to think big enough, but act small enough in order to get the result. And once you do that, you'll be a lot closer to achieving that thing. So think big, but act small. On your journey in life, I want you to do your best to set better standards for yourself. A lot of people that you see who are wealthy or who have accumulated a great amount of resources and financial power set better standards for themselves. And these are just a few of those standards that they set for themselves. Starting out with number one, we have demanding real results. Not just empty words, but real results. Not just empty promises and things that people might say they'll do or want to create, but never get to the point of creating. They actually see the results and they actually see the outcome happen. Compared to most people, they say they want something, they don't get the thing that they want simply due to the fact of them not putting in the effort to get it. Wealthy people understand there are two types of people in this world, and they're always going to put their money behind the person who generates the result rather than the person who doesn't. Because the person who doesn't isn't even trying. The person who does generate a result, but is not the result that they intended, is trying. So I would more than likely put my money behind somebody who is always going to show up with some form of result. Even if it's not the actual intended result, it's close to it or somewhere around it, I'm okay with that because I know that this person is a safe bet. And not necessarily a safe bet, but just a good investment because they have the wherewith to put in the effort to get the result compared to the person who doesn't and just says they want to do something but does not do it. I would more than likely not ever want to put money behind that person because they're all talk, no action. So most investors set standards on results and people who generate results compared to people who don't. The second thing that wealthy people do in order to set better standards for themselves is they invest in what matters. They invest in what matters to the world. They invest in what matters to the people all around America, all around Europe, all around China. They invest into things that have value so much that without it, it affects the world in a way that people would be uncomfortable or not satisfied or not happy with. They invest in what matters to people. Because people are consumers, and consumers are what help your business or thing that you're doing be of value. So if you're invested into something that matters to a lot of consumers, then you're in the right market because now you're seeing a great return on your investment due to the fact that you're providing a solution to someone's problem. If you're just invested into something that isn't providing a solution to anyone's problem, 9 times out of 10, you're going to fail in that investment. That investment is not going to work out for you because there's not enough demand or importance in that said product or service. So Instead of investing to something that doesn't matter to people, invest in the thing that does matter to people and set a standard on what that thing is, because there's different levels of what matter to people. There's something that matters to everybody, and there's something that matters to somebody. You want to invest in what matters to everybody, right? So health, that's a great example. Food, people need to eat, right? These two things are things that aren't really risky, just depend upon how you approach it. If you approach it the right way, then it should work out for you. If you don't, it doesn't work out for you. But you don't want to overthink these things, and you want to invest in what matters to people's well-being. So just do your research and find out what it is that you like to do that aligns with your interests, and invest in that thing. The third thing people do, wealthy people do, is they have self-composure, meaning they have self-control. In the market we're having right now, I guarantee you there are people who are losing thousands, hundreds of thousands, millions even of dollars simply due to the fact that they don't have self-control or self-composure in this kind of market. They don't have the ability to wait for the right opportunities to present themselves to capitalize and make the money that they want to make. Instead, they're just buying FOMO, buying into the hype, buying into all the things that don't matter, and missing out on the opportunities. They're the liquidation. Once again, we've talked about this before, liquidation. You're getting caught in the selling positions rather than the buying positions. You're not being the person who's benefiting, you're being the person who's being taken advantage of, who's losing. Meanwhile, the person who's winning is the person who's self-composed, the person who waited for the dip, the person who waited for the pullback, the person who waited for the right opportunity and held through the fire, held through the downside, held through the negative headlines coming out in the market, held through all the noise. They weren't distracted. They were poised and focused on the thing that mattered, the investment that mattered, the value opportunity that mattered. They weren't caught up in the hype. They had self-composure and control over their approach, over their execution, over their resolve. Everything came down to that person's ability to just sit still and wait. If you can't sit still and wait long enough to see a result that you want happen, you're going to always be caught in the liquidation. So in order for you to see better standards for yourself, you have to have self-composure, you have to have self-control, you have to be willing to wait long enough to see a result happen. That may or may not happen. It might not happen, but you might miss out on some things, and that's okay. You have to be okay with missing out. A lot of people are not okay with missing out, and that's why they overextend themselves and over-execute or overdo it in the market, just simply due to the fact that they don't want to miss out. If the thing that you were looking for was really going to happen, it would just happen. It wouldn't wick off of multiple levels and do up and down movements in a way for you to continue to get in and get in and get in and get in. It would happen one time, and that one time would then move aggressively to whatever way you wanted it to go. And that's it. It wouldn't do anything more than that. But you're continuously getting caught in the noise and all the headlines and news and Trump tweets and all these other things that's happening, that you're not even able to filter enough noise to focus on what mattered, to have the conviction, to have the self-composure, to wait long enough to see the thing you want to see happen. Do better. That's it. The fourth thing that a lot of wealthy investors and wealthy individuals do to set better standards for themselves is they have a long-term perspective and way of thinking. We've talked about this before. The person who thinks 5 years down the road, 10 years down the road, will win whatever the condition is in that very moment. Whatever the circumstances, whatever the problem or situation they're facing is right now, if they're able to withstand the next 5 to 10 years of market movement, of situations, of pandemics, epidemics, and they're still showing up and still putting in the work and still investing and still putting in the time, they're 9 times out of 10 going to be way further along than the person who was thinking the short term, in the moment situation. The person who was doing the in and out moves in that very moment is more than likely going to be less off than the person that's thinking long term. You got to be able to think long term. You got to be able to filter out all the distraction, all the noise, all the fear, all the worry out of your peripheral, out of your mind frame. You got to be able to filter that out. That will be the only way that you get the return and the gain that you want in the market. I invested into AMD 3 years ago. 3 years ago, when I bought that stock, it was worth around $100. That stock has gone from 100 to 200, from 200 down to 90, closer to 80, from 80 back to 200, from 200 back to 250, new all-time high, from 250 down to 190, from 190 all the way up to now $460. In that stock, I am up over 300% just simply by holding for the last 3 years. You got to be able to hold and think long term. A great investment and a great opportunity only comes every so often. If you're steadily worried about the price action and the movement in that moment, you're only going to see what's happening in that moment. And you're only going to get the results that's happening in that moment. But if you think a year, 2, 3, 4, 5 years down the road, 10 years down the road of what can be possible, if you just simply wait and stay patient, you will see a way better return on your investment. The last thing that you need to do, that wealthy individuals do to set better standards for themselves, is they don't get distracted and they don't allow anyone and anything to take away their attention. Staying focused on what matters is, bottom line, the most important thing. If you can't even stay focused long enough on the thing that matters to you the most, you're cooked. Point blank period. You have to not allow anyone and anything to have a piece of your attention. Your attention is the most valuable thing you have because that's your time that you have available. You don't know how much of that time that you have is, but you know that whatever time you have to use it to the things that matter to you and stay disciplined in the way of using it. The way you use your time matters. So if you're easily distracted, watching TV, scrolling on Instagram, doing all the things that don't align with what you want, then you're 9 times out of 10 cooked. You're not going to get the results that you're trying to get simply due to the fact that you're giving away your attention to other things that don't help you get to where you're trying to go. Wealthy people understand this and they protect their attention to the max. They stay focused on what matters. They stay focused on the things that help them get the results that they want. Stay focused. Don't let anyone and anything have your attention. Protect your attention at all costs. Bottom line is, in order to have a better life and have the life that you want, you must set better standards for yourself and for the actions and the things that you're doing on a day-to-day basis. And you must create discipline within your life because discipline creates the longevity that you want. Stay disciplined, stay focused, stay poised on your journey, and you will get to where you're trying to go. Investment tip of the week. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. Normalize winning in the market. A lot of people in this era, in this time, are treating investing and trading as if it's a gamble. I've been caught up in doing that myself. And I'm here to tell you that the market is not meant to be fun and enjoyable. And don't get me wrong, enjoyable maybe, okay, so somewhat. But fun isn't the right term to use for investing in day trading. It's meant to help you change not only your life, but your family's life as well. It's meant to be a tool used to help you scale, leverage, and grow your current assets. That's it. It's not meant for you to have fun. It's not meant for you to treat it as a way of, oh, I'm gonna flip this money in one day and make this money turn into this amount of money in a day. No, that's not the mentality that you need to have when investing in day trading. You're treating it like a gamble. It's not a gamble. It's a systematic process that will help you grow your finances if you allow it to. But if you treat it like a gamble, then it will be treated like a gamble and you will lose every single time. It's not baccarat. It's not roulette. It's not craps. It's stocks. Buy and sell stocks. Companies that go up and down, that have value and serve people and provide services publicly. Stocks. That's it. It's stocks. It's not a casino. It's not Winstar. It's not Hard Rock. It's not Bellagio. It's stocks. Keep it simple. Trade what you like. Trade what works. Trade the value stocks. Trade the great companies and win. Stop allowing yourself to get caught in the degenerate trades and investments. Take the quality setups, take the quality trades, take the quality companies and invest in those companies. Hold those companies for 5+ years, 10+ years, and hold until you see the return that you want to see in the market. And you really don't have to sell. That's a whole nother story, but you really don't have to sell. But if you want to sell, then sell. That's your choice. But just win. Focus on winning. Stop allowing yourself to lose simply due to your approach and your mentality to the market and treating it like it's a gamble. It's not baccarat. So lock in, normalize winning, and win. What a week we've had in the market. We reached new all-time highs last week. QQQ reached up to about $712. SPY reached closer to about $738. And today we closed closer to $740, but we closed right below it at $739 roughly. What can we expect this week in the market? Now, this isn't a stock market prediction or recap, but we're talking about the market reaching new all-time highs. We have two big events coming up this week that will, I think personally, will impact the market in a way that will make it move higher or lower. First off, tomorrow we have CPI coming out tomorrow morning, so be mindful of that if you're day trading. You know, we have that coming out at 7:30 Central Time, so my time, and 8:30 Eastern Time, I believe. So be mindful of that. Another thing we have coming out later this week is the announcement of the new Fed chair coming into the Federal Reserve, Kevin Warsh, which means that Jerome Powell will no longer be our federal chairman. So those are two major events coming up this week that will once again move the market in a way that makes it move higher or lower. I was doing a little research regarding the transition of the Fed chair and Kevin Warsh, and you know the removal of Jerome Powell and how this will impact the market. And I am curious to see how it actually impacts the market myself, just simply due to me reading into what his intentions are as the Fed chair. You know, he wants to reduce the rates aggressively and really drop the rates down to closer to 2%. Right now, I think we're sitting somewhere around 6%. He pretty much wants to restructure the way that the federal chair and the Fed are perceived in the economy and in the public. He wants them to be more excluded and reserved and not too much involved into the public's interaction. He wants less interaction. He wants them to just strictly focus on interest rates and how the market is affected by the interest rates, and that's it. He doesn't want too much energy and interaction being had. I think that's interesting too, because it allows, in his perspective, he feels that it allows the Fed to make, not necessarily make more mistakes, but have more cushion and more room to be flexible with different things happening in the economy. I don't disagree, and I think that it would allow some things to be more flexible, like the market to run a little bit more if certain reports aren't coming out as often, or certain meetings aren't being had as often. The market can fluctuate and flow a lot more, in my opinion, just simply due to the fact that they're not always communicating and letting it be known of what's going on in the economy and the data that's being reported. It's like less reports, but over time it's larger reports, so a larger expectation or something like that, like a consumer price index report happening instead of every 3 months, happening every 6 months, or happening semi-annually. Things like that would affect the market in a way where it allows it to flow a lot more, which could lead to more aggressive sell-offs or moves when these data reports happen. They could lead to even a higher push higher or a push lower, whatever the case may be. That's his intentions with coming into the market. I don't disagree with it. I do think that it would be an interesting take to see if it actually is allowed and actually can happen. We are in a very interesting spot with everything else going on in the market, with war and the midterms happening. There's a lot of moving pieces. So if that can happen, it would be interesting to see how that transition is had going into the next few years. But typically the market responds negatively to new chairmen coming into the market. We've had the run up that we've had, and normally that's the case when most chairmen are being transitioned. They have a aggressive run up, and then from the aggressive run up, when the new chairman comes in, the market then tests that new chair and sells off in a way that makes it aggressive to see how the new chairman will respond to said sell-off. So saying that to say, be mindful of possible selling coming in the near future. There are a lot of indicators and things that indicate that there can be possible selling to come in the near future, with data just backing from midterms being a main factor, the Fed chair changing being another factor, war being a main factor as well, oil prices going up and down, things of that nature fluctuating. A lot of different moving pieces that can impact the market. So with us being at these all-time highs, these are things that I want you guys to be aware of, so that you're not caught off guard or caught, blindsided by said movement. But with that being said as well, take advantage of the market movement that we're seeing, because we are seeing some really wealth creating opportunities happening in the market right now, and there's a lot of growth that's being had, especially in the markets like semiconductors and infrastructure around AI. We're seeing a lot of growth and a lot of value being poured into those markets. SanDisk has ran up an amazingly amount of money in the last almost less than a year, I believe. They IPO'd last year in February or March, and they've ran up all the way to $1,500 since then, IPOing less than $100. Crazy run up to see. Very upset I missed that, but I am looking for the next potential opportunity like that. Not saying that it will do exactly that, but something similar to it would be great. And I will definitely make sure to share that with you guys, so you know what to look for, to what companies to look at next, so that you can see a return like that, similar to the next investment for that kind of market. Because the only thing with SanDisk, from my perspective, what I saw happen was it being a shortage in memory, right? The shortage of memory happening, and they're needing a demand for said shortage. And so with that shortage, we saw the aggressive demand push into the market, and the price of said companies like Micron, SanDisk, I believe SK Hynix, all seen major upside from that demand. So that's the focus, is looking for what's in demand but has low supply and needs more of that supply in order to meet said demand. That's the focus. You want to find the companies that are supply what is in demand and don't have enough supply to meet the demand, so that they need to make investments necessary so the supply increases to meet the demand. So that's what I'm looking for now, and I'm studying all the different factors of AI and infrastructure to understand what matters the most right now, what phase are we in that needs more supply of this thing, and what are we not meeting enough of? What are we off a lot by, and not meeting the criteria of supply needed for this said thing to be created. So that's what I'm looking for currently. So once I figure that out, I will share that with you all so that you are also in the know. Make sure you guys bookmark or turn on notifications for whenever I post these videos and podcasts, so you guys are not aware of the things that I'm talking about, and so that you guys can capitalize off the next opportunity. Because I think that there will always be a new opportunity in the market that presents itself. You just have to be positioned quick enough and early enough to capitalize big enough. So yeah. But with that being said, that will be episode 27 of the Rich Off Gains podcast. Once again, y'all, it's your boy CB checking back in with you all. Thank you all for watching or listening, wherever you are, whenever you are watching this. God bless you all. I want to thank God for another day that was not promised. It's important to remember, make sure that you are managing and having self-control of your emotions and your thought process. You want to always have clarity on the things that you're thinking. Be clear with your intention. Be clear with your ideas, your visions that you're seeing, because God's blessing with those visions. And if they don't seem right, or if they don't feel right to you, then it's not the vision that God's giving you. It's somebody else's vision or something else's vision that's trying to distract you from the thing that you need to see and have clarity of. So just make sure to keep your emotions in check, keep your mentality in check, your mental in check, and stay focused. But God bless you all. Thank you all for tuning in. I'll see you guys next week. Same time, same place.